It's about that time of day again. My name is Joseph. It's Monday evening, February 27th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish and trying to complete a measured move, but there are two big clues that tell us to wait for a correction higher before we sell more tomorrow. The S&P is bullish, but a big clue at 2 p.m. Eastern Time this afternoon tells the buyers to look for a deeper pullback than they might be expecting tomorrow. Gold is bearish, and the strong move lower this afternoon tells us to be looking for one of four scenarios tomorrow. The euro is bearish, and a great example of market psychology on the chart tonight tells the sellers exactly where to be looking for opportunities tomorrow. And of course, we'll wrap up tonight with the FDAX. The FDAX is bullish, but we're getting a little too close to the no trade zone, so we'll be waiting for a pullback in Tuesday's session. But we have another great newsletter in store for you guys tonight. We have plenty of reliable trading opportunities setting up for tomorrow. We got some major news. We got a speech on the horizon. Got a great plan of attack here for you guys as we crack open the last few days of the month of February, and we try to bust into the month of March here with a bang. Before we jump into that video, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. It's only a small snippet on the YouTube channel. Follow that link and come join me on the blog at Sideways Markets for the full-length version and all four markets and all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. Many different ways to follow me on social media. Pick one of your favorites and follow me on social. I post updates and charts and important links throughout the day. Download today's charts. How easy is that? All the charts you see me using in tonight's video, you can download those charts and have them ready on your computer tomorrow morning. In the upper right-hand corner, if you're brand new here to School of Trade, if you do one thing else besides watch this video, make sure you grab that free pass in the upper right-hand corner. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. And if you're brand new, don't forget, we get a great frequently asked questions page with a who, what, where, when, and why, and I'm always here to help you guys out 24/7. Hit me up on the live support tool on the right-hand side of the website. Hope you guys had a great weekend. Boy, we got some sunshine this weekend, a little bit of rain, a little bit of sun. Boy, I'll tell you, if they try to say that drought is still in effect here in California, they must be lying to us here, because it's been nothing but drizzle here for the past few months. Hope you guys had a great weekend. Hope you're staying warm and dry out there. It's been a pretty good weekend across the board, though. It feels great to be back here with you guys here once again. Last few hours of the month of February, and then we go into one of my favorite months of the year, the month of March. Got a big month of March coming right around the corner here, and it's definitely setting up to be a doozy. Tomorrow's Tuesday the 28th, the last day of this month of February. Remember that weird month of February, right? Not a leap year this year, so last day of the month tomorrow. We don't have any major news on the calendar here for tonight. We got some industrial production from our good friends in Japan here overnight. So nothing real major here coming out overnight. We go right into Tuesday's session, and we'll go all the way down to 5 a.m., right, from our friends, the Italians, the CPI, right, 7 a.m., right, in India, the GDP, and then, of course, we go right into the 8:30 GDP tomorrow for the U.S. session. So major news coming out tomorrow morning, starting off at 5 a.m. Eastern Time. I would imagine the big headlining news tomorrow would be that GDP, and they're going to lump that in with the international trade tomorrow morning at 8:30 a.m. So always nice to see a big Red Star news event right at the beginning of the U.S. session. Don't forget, we'll be with our advanced members in our trade room tomorrow morning, and be looking forward to that big news at 8:30, kicking us off right with a bang tomorrow. You should also be aware tomorrow night, of course, is it's not really the State of the Union tomorrow, but it's a joint session speech. Our President Trump here in the U.S. Everybody seems to be kind of keeping their eyes on that right now. So you may see that start to bleed into some of the equity indexes, gold, of course, anything that is manipulated by the dollar, right? So I would imagine stock traders, with the markets being at all-time highs right now, they might be a little bit jittery tomorrow. And of course, definitely keep an eye on gold and the euro tomorrow, as those are always the tail, right, that is being wagged by the U.S. dollar being the dog, right? So watch the gold, watch the euro, and be aware if tomorrow's a pretty slow volume day on the equity indexes, the E-minis, you know why, right? Everybody's stopping to watch, right, to see what Trump's going to say tomorrow night. So not expecting too big of a movement tomorrow off it, but, kind of keep in mind that that news tomorrow night, that speech from Donald Trump tomorrow night may have an impact on the equity indexes, gold and euro. As always, I'm not expecting too much to be affecting crude tomorrow. One of my favorite reasons why, one of the big reasons why we love trading crude oil in our trade room. Speaking of crude oil, you get the plan for tomorrow for the news, early morning news, speech tomorrow night. Again, you wait, look and see for clues here for the E-minis as well as the gold and the euro tomorrow. Let's jump in. We got crude, S&P, gold, euro, and FDAX this evening. Crude is bearish with a wedge this evening. And if you watch this newsletter every evening, like I always recommend you do, then you know how much we love trading with wedges. This wedge is almost done, which means the range between the highs and the lows of the wedge is far too small to trade, which tells us to look for a move higher up to resistance levels for the most reliable selling opportunities, going back down to the wedge target waiting below. One quick thing here about wedges. Wedges are really, really powerful tools. First of all, one of the most important things to remember about a wedge is that the point of that wedge, right, the vertex, is the target, right? So that's where the sellers are trying to go to. Another thing you want to be aware of when it comes to a wedge is that as the wedge gets narrower and narrower, traders are going to be weary about, in this case, selling the high of that wedge, right? So, kind of once we start getting into this narrow range here inside that wedge, now sellers just don't have enough incentive to keep selling inside the wedge. So what you want to do is keep an eye on a prior swing level, wait for that price to go up so that the sellers can sell high with a nice big target back down to that low. So as the wedge is nice and wide, we can sell the high of the wedge, but as the wedge starts to get narrower and narrower here, we expect to see the market poke its head higher to allow the sellers to participate, selling back down. Another thing you want to keep an eye out for a wedge is that it's always a little bit tricky once it gets down to that wedge target. Remember, we're trying to pinpoint the area where two trend lines come together, which means this can be a very challenging area to really nail down. So think of it as a trading range. And with any trading range, we look at that now as a spike in range. We want to go up so we can sell it back down again, right? So look for that price to go up. They can sell high, go up, so they can sell high, and of course avoid selling into the narrow part of that wedge, right, or into the target. So here we are now, right? Lots of selling opportunities up around the high of that wedge, right? We participated with that today in our trade room. And of course now we find ourselves down around the finishing point of that wedge, right? There's your wedge target at 96. You get a measured move, but really at this point though, right, this being your no trade zone, we really want to look for price to go up so we can sell it back down, right? If it rolls lower, wait for it to go up, right? So we can sell it back down, right? That's the real key about that wedge. Again, think of this wedge target at 96. Really think of it as maybe from 54 even to 53.95. Think of that as the support range, right? So assuming now we go up, right, back down again, right? We go down into that wedge, right? Watch out, don't take the trap, wait for the price to jump up, and we'll sell it back down, finding areas of resistance, right, to allow us to sell high. Be careful if this price really runs tomorrow. We have the measured move waiting just below the wedge. Below that, we have last Friday's low. So like any good market, right, like any bear market, if it just runs here and really runs, kind of a reckless abandon, you'll see a market looks like that in a moment on gold. But if the market really runs lower, just remember it's reaching its objectives, right? When the bears reach their objective, what's going to happen? They're going to take their profit, wait for that price to get up, right? So we can sell it back down again and keep looking to fade those moves until we see what? Until we see a strong move higher that can get back above that moving average and show us they can hold a pullback. If the bulls can hold a pullback above that moving average, we'll gladly give control to the bulls, right? That doesn't mean it can't happen now, tomorrow, right? Tomorrow afternoon. Just wait for the bulls to take control before you start looking for buying opportunities. Real nice chart there on the crude. We got some great charts here tonight. Get the plan there for you guys tomorrow on crude oil. How about the S&P? The S&P is bullish and trying to finish off a measured move target tomorrow, but that may be more challenging than the bulls would like because we can easily see the buyers took all their profit when they retested the high. This tells us to consider this chart to be similar to a trading range. If the market's in a trading range, then we know that price will rotate from the high back to the low and then back up to the high again. So buyers will be wise to look for seller failures on this recent pullback, but don't be too surprised if the sellers are successful at sending this price back to the lows before giving the buyers a chance and their own round of opportunities tomorrow. Really, really good example here on the S&P here tonight. As you can see, the day starts off with a very strong move higher, right, up to new all-time highs again. And just like we've been saying over the past few months here on the S&P analysis, is that with the market being so bullish like this and at all-time highs, it's going to take a deep pullback to really get a lot of buyers interested, right, in allocating their capital, right? That deep pullback happened, right, just about 10 a.m. this morning and gave the buyers a chance to wind up, right, and retest the high. We saw a great example of that today on crude oil, and this is a great example, right, on the S&P. Whenever we have a real strong move in one direction, and I'm going to build on this later on gold and euro as well, so stay tuned for those charts as well. Whenever the market makes a strong move in one direction, and my definition of a strong move is where it doesn't pull back to that moving average, right? It's just kind of straight up or straight down. You know, there may be these, right, there you may see these real kind of, you know, sharp little pullbacks, but, you know, again, nothing really pulls back far enough to let anybody into the market. And that's the psychology that you want to be thinking about. When we have a real strong move in any direction, bullish or bearish, it doesn't give the majority of professionals, right? And professionals don't chase markets. They wait for pullbacks to buy low in a bull market. So when the market really runs like this, it's usually considered to be irrational. There's some short covering rally going on. There's some news happening. There's something else going on out there that may be a little bit under the surface. The bottom line is conservative traders are not able to participate in that move. So what's likely to happen now is find a previous area of support, combine that with your moving average, and now we know that on the next pullback, the odds are very high that buyers enter at support with the goal of going back up and retest that high. Now here's where it gets important. Once they retest the high, and again, the reason why the odds are very high that we go back to retest the high of day is because all the buyers were just waiting, right? They're waiting for a chance to buy on a deep pullback. Now they get their opportunity to buy low rather than chasing and buying high. And where's their objective? Is their objective a big, massive measured move? No, it could be if they can prove to us they go through the high, but the initial objective is to get back up and retest the high. Now, once we get back to retest the high, we take a timeout and we like to wait and see what happens. In most situations, you're going to see one of two things. You're going to see either a dramatic profit taking, right, which we're seeing right now on the S&P. We saw the same thing on crude this morning. Or you're going to see it push right through, keep going, strong enough to get that moving average, and it will hold that next pullback, right? That'll be your proof right there. The buyers are not done. And then we're looking for the measured move. We're looking for the next market's objective. So here we are right now, right? We have that strong move up. The buyers clearly don't want to buy high. They wait for price to pull back below a prior swings. They can buy low. They load up, right? Everybody on the bus, and we go back up to retest the high. Now, once we get that high retested, look what happened. Did they continue through it? Look at the measured move. The measured move is so obvious right there. Why would they stop? Probably because they took their profit at the high, right? So the measured move is right there. You would think, boy, you would think they would buy that right up and right to the measured move, but this is what happens when a market is trading at all-time highs. Now we have a situation where we see proof now. The buyers clearly took all their profit, and now here we are at an area of support. Now, this is definitely where we're looking for buying opportunities. But what I'm anticipating here is that whenever we have a double top on the chart, single bottom, what's next? Think of it as a possible range, right? Look for that rotation back down to the low of that range now. And so looking at this now as a possible range, we have a double top. Now all we need is to get that rotation back down to that range buy zone, and that will give us another round of buying opportunities going back up to that range. Right now, if you're an experienced trader looking at this market right now, where would you rather be a buyer? Would you rather buy halfway back, or would you rather buy all the way back? Right? I hope you said you'd rather buy all the way back, because now look at all that profit potential.